All right, let's jump right into it. The date is January 27th, 2026. And if you just took a quick glance at the Colombo Stock Exchange today, you'd probably think it was a total snooze fest. I mean, the main headline number looks like this: plus 0.03%. Seriously? You could blink and miss that. It's a number so small it basically screams, nothing to see here, folks, move along. It's like the entire market just hit the snooze button and decided to sleep in. But what if I told you that while that index was sleepwalking, a massive 5.2 billion rupees changed hands? Yeah, now that's the real story. Where in the world did all that cash go if the market average went absolutely nowhere? Well, that's the mystery we're cracking open today. What we're looking at here is a classic case of a fake flatline. That tiny plus 0.03% is just an illusion. It's an average that's hiding a battlefield of intense activity right underneath the surface. So come on, let's peel back that top layer and see what's really going on. You know, this is probably the best way to picture it. The main index, the all-share price index, or the ASPI, that's just the duck, gliding calmly on the pond. But underneath the water, whoa, those feet are paddling furiously in completely different directions. It just goes to show you how a single number can be so misleading. And look, the official data totally backs this up. The ASPI, which tracks every single stock on the exchange, was up that tiny 0.03%. And the S&P SL20, which is just the 20 biggest companies, did a little better at plus 0.33%. See, neither of these numbers screams huge, action-packed day. This is that illusion of calm I was talking about. Okay, so if the overall market barely budged, but billions were being spent, we've got to follow the money. Where did this absolute river of cash actually flow? This, right here, is where the real story of the day begins. And here's our first big clue. That 5.2 billion in turnover, it wasn't spread out evenly like butter on toast. Not at all. It was super concentrated. A huge chunk of it, 1.6 billion rupees, poured into just one sector: capital goods. This tells us investors weren't just buying everything, they were being extremely picky. And that created these intense pockets of crazy activity. So this brings us to the first of two major stories playing out today, what I like to call the smart money playbook. This is the calm, strategic, long-term game being played by some of the market's most sophisticated investors. And check this out. While a lot of local retail traders might be chasing those fast-moving stocks, foreign investors were net buyers, injecting over 77 million rupees into the market. They aren't just speculating, they are strategically placing their bets on the bedrock of the CSE. And where are they putting that money? Well, a prime example is John Keells Holdings, JKH. It's the biggest company on the exchange. And as this analysis points out, with its strong fundamentals, things like the West Container Terminal project and the City of Dreams, it's positioned to lead. This is the investor path, buying solid, stable companies for the long haul. But at the exact same time, in a completely different corner of the market, a totally different story was unfolding. Forget stability, we're talking about the penny stock frenzy, a high-risk, high-reward world that's driven by pure, unadulterated momentum. This slide just captures the two-speed market perfectly, doesn't it? On one side, you have the JKH playbook, stability, fundamentals, long-term growth. And on the other side, you have the world of penny stocks, pure volatility, chasing momentum, and just aiming for those quick, short-term gains. It's like two different universes colliding on the same day. A fantastic example of this speculative frenzy is TESS Agro. The stock had a really strong bullish setup, and traders just pushed it right up to its first price target of 1 rupee 70. This isn't about fundamentals. This is about chasing a price chart, pure and simple. This is the trader's game. But, with this high-reward game comes some extreme risk. It's always worth remembering that classic trader's advice: never try to catch a falling knife. These high-flying stocks can reverse in an instant, and trust me, you do not want to be the one left holding the bag. So what does this all mean for you? We've seen these two totally different stories playing out under one single flat headline. This really brings us to the big question. In a market that's moving at two different speeds, which lane are you in? So when you really boil it all down, there were two very clear paths on the CSE today. First, you had the investor path, patiently buying into the future of stable giants like JKH. And then you had the trader path,
riding the volatile waves of penny stocks like TES, just hoping to catch lightning in a bottle. Two completely different games on the very same field.
At the end of the day, today's flat market wasn't flat at all. It was a market of choices. It wasn't about whether the market went up or down. It was about understanding where the different currents were flowing and then deciding which arm you wanted to ride. And that leaves us with the billion rupee question, doesn't it? We saw the two speeds today, the steady investor and the high-speed trader. So what happens tomorrow? Is that smart money going to keep flowing into blue chips, or is the speculative frenzy going to take over? Where is the money flowing next? That's what we'll be watching.